Hi guys, Jason Whaling here, and today I want to talk about the safe investment that will actually destroy your portfolio and your chances of actually building wealth in the stock market. This is all about dispelling a common myth, because really there's no such thing as a safe investments. There's good investments and there's bad investments, and whether an investment is good or bad is completely dependent upon you. And this is because true risk lies with the investor. And that's a direct quote from who I personally think the greatest investor of all time, Benjamin Graham. And he was actually Warren Buffett's teacher, so that's kind of why I like following his stuff and what he came up with. And so this is the whole concept that the investments that you make are good or bad based on you. And here's a quick example of what I mean. Let's say let's make up a name and say Tom. Tom, for example, works at a meat packing factory. So he would be uniquely positioned to invest in other meat packing companies, most likely meat packers, maybe meat farms. So he'd be uniquely positioned to invest in other meat packing companies. Of course, you can also look at packing companies around the meat industry. So maybe he also looks at some that do fish or farming. But sticking within his sphere of professional knowledge. And really, when you think about it, that's kind of just common sense. Invest in what you understand. For us, we wouldn't know the difference between Meat Packers Co. and Meat Packers United. Maybe Tom, because he's in the industry and because he knows the quality of the meat, knows that Meat Packers United is the place to go, and Meat Packers Co. just maybe they make terrible products, and he knows that they wouldn't be a good company to invest in. And really, when you're looking to invest, that's about as complicated as it should get. You take your knowledge and you figure out which company in your industry or sphere of knowledge, and it can also be hobbies too, you decide which one you figure out. Company A, good. Company B, bad. A for awesome, B for bad. It's that simple. For some reason, the Wall Street crowd seems to throw this logic out the window, and they tout different investments as quote-unquote safe. And this is the safe investment that really is no longer safe. It might have been at one time. It was at one time, but it's not anymore. And I'm talking about U.S. Treasuries. And I'm focusing on U.S. Treasuries because these are touted on quote-unquote the safe investment to make for some strange reason. If we're looking at this 10-year chart, we can clearly see the downward trend of Treasury yields or returns. What this chart shows us is it's going to be really, really hard to build wealth or have a good retirement account for that matter with these rates. I don't know about you, but 2% on my money a year, locking my money up for 10 years, not exactly a great sign. And this trend has been occurring over a 10-year time span. So this isn't just, this is a temporary dip. No, this trend has been happening for a very, very long time. So on top of the abysmal returns from the 10-year Treasury yields, we've got one more problem with them, because normally these guys give a nice solid return, as you can see for a very long time they did before they dropped. The other problem with them is now they are just as susceptible to market crashes, specifically flash crashes, as normal stocks. Back in October of 2014, the 10-year Treasury market saw an instantaneous drop of over 60% in a matter of minutes. And that is simply unprecedented. And to this day, they still don't know how exactly it happened. And this is not how a quote-unquote safe investment behaves. So now we've got two problems. We've got Treasuries not giving us the returns that we need to build a sustainable portfolio, and we have Treasuries acting like normal stocks, dropping up and down in a matter of seconds with large swings. This leaves us with two distinct choices. We can either perform our own research using our knowledge and investing in companies that we know and understand, or we can continue to mindlessly follow the outdated Wall Street advice and invest in quote-unquote safe investments that are losing yield and susceptible to flash market crashes. Personally, I've experienced a great deal of success using the one stock approach here, so you can click on this chart to learn more about that, or you can continue to follow the outdated advice of Wall Street and invest in treasuries that will give you an almost zero yield. Choice is yours.